Here's your morning briefing for this Wednesday. U.S. stock index futures indicated flat to weaker open likely for Wall Street. P/E ratio of the S&P 500 ahead of the day stands at about 13.5, which Reuters equities analyst John Cozy sees as getting a bit pricey. Well, that doesn't appear to be a big concern for fund managers, though. The latest Reuters asset allocation poll just out minutes ago shows big money managers upping their allocation to stocks by 2 points to 65%. And they're backing further away from bonds. Allocation now down to 27.9% from over 30% last month. That's the lowest allocation to fixed income in at least a year. Speaking of bonds, treasuries are down in light trading overnight. Thomson Reuters IFR Markets says developments are centered on a minor steepening move between 2s and 10s, while the very long end is flatter today ahead Fed's purchases out that far of the curve of about $1.5 to $2.5 billion. That operation mid-morning. Rising rates have weakened mortgage demand. U.S. mortgage applications have down now to the lowest level in nearly a year, according to data just out from the Mortgage Bankers Association. Its index, which includes mortgages for purchases and refinancings, fell nearly 19% in the most recent week, reaching its lowest point since the week ended January 1st. Refinancing activity was a bigger drag, falling nearly 25%. Well, IFR is focusing on existing home sales today as the key data point. Economists there see them rising 6%, which would get sales back on track after the post-home buyer credit plunge. Consensus forecast, though, is a 5% gain. IFR is also above consensus, seeing U.S. Q3 GDP rising 2.9%. That's 1/10 of a point above the Reuters consensus estimate of 2.8. Inventories should contribute to the gains and offset the negative from net exports. We'll also get another read on the holiday shopping season when we get earnings later today from Bed Bath & Beyond. Thomson Reuters StarMine's smart estimate looks for a profit of 67 cents a share. That's a penny better than the consensus. Stock's up 20.5% so far this year. Now, another stock to watch is Micron Technology. StarMine sees the chip company missing by a mile, 6 cents, or about 23%. Micron's been a dog so far this year. The stock's down 23% in 2010. Well, look for technology, industrials, and retail to lead the U.S. IPO market again in 2011. Reuters investment banking specialist Richard Lee says these sectors did raise the most money in 2010 and have the most momentum. They represented nearly 2/3 of the IPOs in the second half of this year, and each returned more than 30%. Public offering proceeds rose in every quarter in 2010 at an annual compound growth rate of 18%. See more of Lee's analysis at 2:30 today on Insider. Well, energy ETFs have seen a huge upsurge in inflows starting in November. Reuters commodity specialist Chris Henwood will tell us what this means heading into 2011. His analysis coming up on Insider at 1:15. And that's your morning briefing for this Wednesday. I'm Dan Burns. This is Reuters Insider.